Palantir Technologies, one of Silicon Valley's most secretive companies, is about to go public with a direct listing IPO. Founded in 2003, Palantir began as a software developer for the Central Intelligence Agency. Over time, however, the company expanded its reach to other government agencies and into the private sector. Today, the firm employs some of the smartest minds in the Valley and gets 53% of its revenues from non-governmental entities. Yet, very little is still known about the specifics of Palantir's such covert operations. So, how can we as investors value a company that doesn't directly disclose what it is doing? Everything you need to know coming up. We'll go over the IPO information right away, and then be sure to stick around for me explaining their business model and market size, corporate governance and controversy, valuation, and the direct listing itself. But first, Palantir was co-founded by Peter Thiel, the tech entrepreneur and venture capitalist who is a longtime member of Facebook's board of directors, and who worked alongside Elon Musk as part of the PayPal mafia. CEO Alex Karp is another founder and the face of the company. IPO information. Palantir stock is set to begin trading on the New York Stock Exchange on Wednesday, September 30th, under the ticker PLTR. The company will be following a direct listing rather than a traditional initial public offering. That means PLTR won't be issuing new shares the same way a regular IPO does. Instead, its existing shares will simply start trading on the New York Stock Exchange. For reference, stocks such as Spotify and Slack also pursued direct listings. Regardless of the process, which has been a little controversial so far getting started for Palantir, PLTR stock will eventually trade much like its tech counterparts with multi-class stock. Link in the description if you want to read a few articles about what's been happening behind the scenes. Business model, a unique government contractor. According to the Government Accountability Office, the government now spends $90 billion on information technology every year. And, you guessed it, Palantir Technologies is one of those critical players. Palantir operates as a software developer with two key platforms. The first, Palantir Gotham, a platform used to identify patterns within existing datasets. This includes features such as Graph, an interface for users to explore data, and Ava, an artificial intelligence system that scans large datasets for patterns and connections. These proprietary technologies are mostly used for government and non-profit applications. And then there is Palantir Foundry, a data warehouse to help companies collect and analyze information. This includes Monocle, a graphical data interface, and AI/machine learning, a statistical package for data scientists. This, on the other hand, is focused more towards the private sector. I'll attach the S1 filings in the description if you're interested. Together, these two platforms define Palantir as a business. Palantir sits in between the two extremes of non-scalable software service and scalable software product. The company can repurpose its two platforms, but only after some customization for each individual client. Business model, a hybrid of service and platform. The company's hybrid business model in between service and product makes the company quite difficult to value as a result of their concentration of work. The company always faces an unclear profit or loss calculation on each sale. If they price too low, they're not guaranteed to cover their R&D overhead. If they price too high, they risk losing the entire contract. Nevertheless, it's a balancing act that they must get better with handling because of how important the execution here is to the rest of their success as a business. Historically, according to their S1 filings, the company's management has struggled to gain control in this regard. In 2019, the firm generated just a 6.7% margin, that being gross profit minus selling expenses. In response to improved margins as a function of benefiting from the pandemic, Palantir stated, margin improvements are generally due to increases in revenue recognized in each period, in addition to a continued decrease in the number of software engineers and related costs required to install, deploy, and manage our software platforms, as well as increases in the efficiency of our sales and marketing function from the investment in a direct sales force. If their financials catch up to their ambition, the company stands to reap massive rewards. The AI industry has been forecasted to have a greater than 40% compound annual growth rate through 2025, which would mean that the industry could generate trillions of dollars in business value. Can Palantir pull everything together and take advantage of the huge opportunity they have ahead of them? We'll just have to wait and see. Corporate governance, issues, and controversy. By issuing special Class F shares to themselves, the company's 3 founders' voting power will never drop below 50%. Ridiculously, that's true even if they sell their shares and/or leave the company. Due to the nature of their work and the relationship it has with politics, this is bound to be one of the most controversial companies in which to invest. So what's the company actually worth? This great article that I've been using to get some of my research from lays out 3 possible valuations. Let me read them to you. Conservative estimates will point to a company more interested in technological mastery than shareholder profits. Using a 3-stage DCF model with a 30% growth rate decreasing to 18% by 2027 shows a fair value of around $4 per share, roughly where its shares privately traded in July. More aggressive estimates might push growth to 45% in 2020, 35% in 2027, and increase its EBIT margins to 35%. In that case, the software firm values closer to $35 per share, or a $77 billion market capitalization. That's more in line with its $20 billion price tag that the investors placed on the company 5 years ago. Since then, the company has almost tripled its revenues. And the most aggressive analysts might even see the software developer as the next IBM or Microsoft. It's one of the best positioned companies to succeed in creating a unified AI and data analytics platform that could push its valuation well beyond $200 billion. So there are a few reasons why the company is so difficult to value. First, unlike consumer goods companies like Tesla and Apple, Palantir doesn't produce for mass market sale. Instead, each deal needs constant tailoring. That means each sale is dependent on the company's ability to hire and maintain talent, something very difficult to predict. Second, Palantir has a hugely unpredictable working capital need. In 2019, the company generated $203 million in self-reported working capital on just $742 million in sales. However, in the first half of 2020, Palantir reversed course, consuming $591 million in additional funds to support just $481 million in revenue. Overall, this unpredictability is not very good for a valuation. And third, there's the secrecy around the firm's operations. Is the company working with the US government on developing the next generation of war machines, or a system to constantly track the location of every American? We might not know until the product gets declassified, which could end up happening in decades from now. Should you buy the stock, the IPO, or even if the IPO has already happened? I predict this stock will be very volatile initially and even following the IPO. Without investment bankers to help value the offering, investors must value the company themselves. Back to our 2 examples. Slack has slumped 30% since its 2019 direct listing, and Spotify, conversely, has soared 62% since its debut. Personally, I look to pick up some shares if Palantir trades around $10, its set price on opening day. To me, the company pushing further into the private sector will unlock an incredible growth trajectory. But if PLTR stock jumps to $30 or beyond, then I'm not so sure I'll be buying. I'll do a follow-up video once the IPO is complete. Are you ready for this IPO? Will you be buying? Are you going to wait and see how the first week of trading plays out? Leave it all in the comments. Now hit like if this video and all of my research was helpful to you. And, of course, more epic content is on the way, so subscribe for that. Until then, peace.